In Denmark, the corporate income tax rate is determined by the government and applies to the taxable profit of companies. Currently, it's 22%. So any profit you will make in Denmark in your corporation will be taxed 22%. However, there are several legitimate strategies and considerations that businesses can use to potentially reduce their corporate income tax liability. First of all, Denmark offers various tax credits and incentives to encourage businesses' activities in certain sectors or regions. Research and development tax credits, energy efficiency incentives, and investment grants are some examples. Think if your business is eligible for any of those programs. You can research on the government website and check if something that I'm talking about is applicable in your business. Also, understanding the depreciation and amortization rules in Denmark can be very profitable. By managing your company's assets efficiently, your car or machinery, you can potentially reduce taxable profits. Then consider accelerated depreciation on assets when it is possible. Then you will have more costs in a shorter period of time. A good accountant can certainly advise you on that and show you some options. Moreover, you can maximize legitimate business expenses and deductions. This might include costs related to research and development, employee training, and other business-specific expenditures. Make sure that your financial records accurately reflect those costs. Keep the documents handy, and best option probably keep them online, available 24/7. If you have a loss in the business in the given tax year, this loss can be typically carried forward to offset the profits in the next year. And this is the way of reducing your tax liability in the next year. However, the rules for loss carrying forwards might vary based on the structure of your company. It's different in a sole trader and AS and APS. And above all, choose the right legal structure for your business. Some structures, like limited companies, LLCs, AS in this case in Denmark, or APS, they offer certain tax advantages over the others, like a sole trader. Seek advice from the expert if you need this. And what many people don't know is that interest expenses can often be deducted from taxable income in Denmark. So review your company financial structure and make sure you're taking a full advantage of the deductions and those options that are possible. I strongly recommend you to maintain a very precise financial records and ensure compliance with all tax regulations. This includes accurate financial reporting, timely filling the tax return, paying VAT on time, paying any taxes on time, and adhering to the accounting standards. If you get confused, it's always good to consult your accountant or legal expert who specialize in Danish tax law or in accounting. Most of the experts can provide you some tailored advice to help you make good decisions regarding tax planning and optimization. But what is always important, and what I always will say you, the tax planning should be conducted within the bounds of the law and should not involve any illegal or unethical practices. The Danish tax authorities, Scott, take tax compliance seriously, and engaging in tax evasion or fraudulent activities can lead to severe penalties and legal consequences. Therefore, it's essential to engage in responsible and lawful tax planning strategies. And what is also important is a moral issue. If the tax that you are paying is used for the welfare system, for the growth, for the maintenance of this wonderful country of Denmark, it is your duty as the businessman, as a citizen, to pay the tax, because thanks to that we all living here have a better life and better conditions to exist, and to help those who were not so lucky to be in the position like some of us are. And if you have any questions regarding business in Denmark, feel free to get in touch with us. We wish you best of luck with your business in Denmark.